Costco has been one of the best retailers over the past really 3 or 4 decades, and the biggest reason is because of their membership model. Now, Costco's membership is not like any other membership. You need a Costco membership to just simply get in the door, but that allows the company to have completely different economics once you get into Costco than every other retailer. They can actually make less money on every product that they sell to customers because they know their profit ultimately comes from the membership itself. The actual retail location is basically run at a break-even basis, and historically, almost all of Costco's profits have come from those membership fees. So that's why the company increasing their membership fees starting in September is such big news for investors. So I want to go through why they're doing this, why this is going to be great for the bottom line, and why I don't think there's going to be any sort of cancellations because this is such a great value for consumers. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. First of all, let's go to what we know about the price increase for a membership at Costco. Now, this is the actual announcement last week from Costco that says they're going to be increasing their membership fees. This came along with some comparable sales numbers in the US and Canada. Sales numbers for June up 5.6 and 5.2% respectively. Now, keep in mind, this is at a time when a lot of retailers are having slightly negative same-store sales numbers. So this is extremely positive news for Costco. But they also announced down here on September 1st, there's going to be a $5 annual increase for most subscriptions. The $60 subscription are going to go to $65. And the executive membership in the US and Canada will go from $120 to $130. So what is this going to look like for Costco's bottom line? Here you can see that correlation that I was talking about earlier between Costco's membership fees and their net income. You can see that basically through 2018, they were in lockstep. In fact, the core operations of each one of the stores were actually subsidized by those membership fees through 2017. Now that's reversed a little bit over the last few years as the company has generated a little bit better margins in their stores. That is helped by some of these same store comparable numbers. So now you have net income $7.2 billion over the past year, which is well in excess of the $4.8 billion worth of membership fees that they're generating. But keep in mind that net income is still a tiny fraction of overall revenue, which you can see here, $254 billion of revenue over the past year. That means that just 2.8 cents of every dollar in revenue that Costco generates, it's going to flow to the bottom line. So that's an extremely low net margin, but it makes the economics of Costco work because they're basically able to make a little bit of money now on operating their stores, and then they're going to make a vast majority of their profits on those membership fees. So increasing those membership fees by $5, that's nearly a 10% increase. So that means that net income number is going to go up, not quite 10%, but is going to go up nicely just because of this price increase. And why do these economics work? So I think this is what investors really need to understand about Costco and the membership economics that they've really driven that I think is ultimately going to be really valuable for a bunch of internet companies over the next decade. That's something I've covered here on Asymmetric Investing a number of times, but really the learnings come from Costco because this goes back, like I said, 30 or 40 years, this strategy. And this gets to they are able to actually charge lower prices for everything that they sell in their stores because they don't need to make up a high margin to cover their operating costs. All they need to do is break even on those stores. So lower costs are going to have lower margins, but those lower prices are actually going to attract more customers. That means that there's going to be more turnover in each one of their stores. It's almost like a self-fulfilling prophecy that these lower prices are going to attract more people, which is going to allow you to lower prices even more, which is going to attract even more people. And this is something that other retailers just can't compete with. So I want to compare Costco's margin numbers to a couple of other big box companies, Target and Walmart. And this should lay out exactly why the strategy is so impactful. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. This is a look at the gross margin for Target in orange, Walmart in purple, and Costco in blue. And this goes all the way back to 2004. So you can see that these numbers have been consistent year after year after year. Costco can simply charge lower prices because of their membership model. Target is going to be a little bit more of a premium experience compared to Walmart. So they're going to be charging even a little bit higher prices than Walmart on a like-for-like basis, generating a little bit better margins. But both of them are more than double what we see at Costco. And this really gets to the fundamentals of the business model. Costco can try to take every penny that it possibly can out of the cost of every good because it knows that it has that membership fee to fall back on. And it also knows that customers are going there because they're shopping at Costco. They're not going there to buy Bounty products or name brand potato chips. They're going there for the bulk items that Costco sells. And so they can really lean into that. They talked about that a lot with being able to single source certain products and be able to buy them in much bigger bulk. That lowers the price that Costco has to pay. And then Costco can also charge a much lower price than a lot of their competitors can. And like I said, those lower prices incentivize consumers to spend more of their money at Costco, increasing that churn and that flow through the retail location, which is why this can be such a sticky business and such a valuable business for their consumers. Now, that $5 increase may not seem like a lot because if you're saving hundreds and hundreds of dollars per year by shopping at Costco versus shopping somewhere else, that's going to be value for you as a consumer. But like I said, this increase is going to be a huge way that they're going to be able to improve their bottom line. So that's why this is such a big and such, I think, a brilliant move for Costco is these slow and steady price increases for their membership is really how they're going to increase their bottom line. Now, does this make Costco a stock a buy? That's something that I really struggle with right now. And the reason for that is the company's price. If you look at the price to earnings multiple on a trailing 12-month basis, Costco is trading for 52 times earnings. On a forward basis, now these may be a little bit underestimated because they don't include analyst estimates for these price increases, but that was 48. Now this is a company that over the past 10 years has grown at a little less than 9% on an annualized basis. Over the next 2 years, analysts are only expecting them to grow 6%. So this is not a high growth company, and yet investors are paying a very, very high price. The reason that Costco has commanded that price is because of the stickiness of the business model, these membership economics, the way that I talk about them, that keep customers coming back over and over again. And once you build scale in that business model, how in the world is anybody else going to compete? Target, Walmart, these are some of the best big box retailers out there. They're not anywhere near Costco's prices. And that's just the fundamental business model difference that those companies have. So that's why this is such a big and such a sticky business. Now, is the premium worth it? Maybe it will be long-term. I'm not a buyer of Costco right now just because that price is scaring me away. It is a phenomenal business. It's one that I would love to own in the future, but I would love to pay a much more reasonable price, much more like a market price of 25, even 30 times earnings as opposed to nearly double that where shares are trading today. So that's what's going to keep me out of the stock. But I do think this is a company that we need to watch because you can learn a lot from the membership economics that they put in place. And that's really what I'm taking from the strength of Costco's business. But what do you think about Costco and their recent news? Leave your comments in the comment section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.